This conference will now be recorded.
Good evening, ladies and gentlemen. This is Real Estate Trading Frank. It's approximately 8:38 p.m. on December 5th, 2019. We're just 2 weeks away. Well, 2 calendar weeks away or a little bit more from Christmas. So God bless Santa Claus and God bless Christmas. To all of you, a very warm holiday greeting. This session will be recorded, uploaded to the Google YouTube channel for viewing by everyone else out there. Very, very cold evening out here on the Jersey City waterfront on overlooking New York City. It's, I don't even know the temperature right now. And we have two great loyal members joining us right now, one from all the way up in Calgary and one from Milwaukee. And both from very cold climates. Let's get somebody here from Florida for a change. You know, they're all partying, you know. So that's what happens. But we do have members from Florida, and I'm sure they listen to it when they wake up at their leisure time in the morning, in that warm climate. And I'm sure it's warmer than here, and that's it. All right. So let's begin. We're gonna barrage through a couple of charts on the markets. Then we're gonna talk about some of the weird stuff that's happening in the market. Nothing bad, but it is a stock market, not a market. You know, it's a market of stocks, not a stock market. And I do want to give out a big shout out to Paul for putting out what he thinks is worth putting out and sharing on StockTwits. So thank you, Paul, for that. We are not in the business of paid promotion. We're in the business of referrals. So if you like something, then hit like on the real-time Twitter feed, which is a valuable, invaluable source of information for and actionable ideas for all our members and free trial subscribers. We have a great new member today who couldn't make it, a real solid guy. Was a free trial guy for a couple of months ago, 3 months ago. He was away for a bit on a I believe on a business trip, and came back and signed up for 6 months. And I said, "You love it, great." Carl Smith. All right, just want to throw out the name. And Carl just texted me and said he couldn't make it tonight, but that's it. So anyway, so do follow the real-time Twitter feed, because everything from actionable news, including our honorable President Trump, China talks are moving well. We're New Yorkers, and he is exactly like me. We're like freaky people. You know, we have great intentions. We love our nation. We love our veterans. We love our troops, but we sometimes just make some comments. Well, President Trump is exactly like that. I told you guys last couple of days ago that he was going to reverse, and he was going to say some positive comments about the U.S.-China phase one China deal, which I always believe is going to get done. Now, the pundits from Wall Street, my old hometown, and 14 years in that canyons on Wall Street, and I do understand the mentality. That's one thing I do. So they're always like, no, it's not going to happen. Even the most positive spin coming out of the White House, they have to put a negative spin on it. So I'm not into the fake news business and all that stuff, but honestly, the rumors that are spread by Bloomberg and New York Times and Reuters, sometimes even Fox News, okay? And all that stuff, garbage. We have to look, and the markets react accordingly. That's the reason we have such intense volatility. And so the point is that when Steve Mnuchin today, Treasury Secretary, who I have had the pleasure of meeting many years ago on my when he was a Goldman Sachs partner, I met at he didn't meet me especially and say, "Hey, Frank," you know. Well, if he knew how smart I was, he probably would. But when Steve Mnuchin, Treasury Secretary, made that comment, which I put out there this afternoon, I said one of the smartest and most brilliant team members, one of the members of the Trump administration, I meant it. You have to understand the political game theory that's getting played out. Wilbur Ross is a great person, our Commerce Secretary, but he babbles a lot. He does. All right. I don't know how many services you follow. I want everyone to follow a lot of services. But I don't think they quite understand that the market is driven by political and mental game theory. If you're not a New Yorker, you do not understand President Trump. You don't. I do. I respect him. I think he's a great president. I will bombast him when he's saying things stupid. But overall, he's doing great things for the country. That's my opinion. But is he erratic? Oh my God, is he? Do you wake up in the morning on a tweet and your positions are down upside down and we have to scramble to look at the stochastics and all that stuff? Like, oh my God, were we buying things? Yes. And it turns out to be a good day. And I told you guys 48 hours ago that I'm looking for the Steve Mnuchin post that I put out there. 48 hours ago that he would flip, because he does flip-flop on the comments. I don't like, Larry Kudlow is a great person, okay? An ex-reformed cocaine addict from Wall Street, he is. Read up his history, okay? And he turned himself around. But he babbles a lot. Giuliani, forget him. I don't know why the heck Trump ever got him as his lawyer. Dead serious, all right? You guys, seriously. He puts President Trump more in tight spots than anyone else that I can ever think of. But thank God he's not making comments on U.S.-China trade talks. All right? So the point is that, okay, I did say President Trump would flip and make positive, friendly comments. Yes, he did. Because President Trump is a deal maker. He wants to make a deal with China. It will be an interim deal. That's fine. He's not a China hater. We don't hate China. We're not racist as Americans. We just don't like a bunch of the stuff that they do. And China, being very stubborn, like an atypical stubborn Asian governmental thing, they don't want to buckle. I'm just sharing my thoughts here because you have to understand where I'm coming from, why I'm right so many times. Because I understand cultures. I've traveled extensively. And if you don't travel extensively, you don't understand people. Everybody. I wrote a paper back in college, junior year, for international economics as to why American exceptionalism was one of the best. I got an A++ to the point where I was called on the podium to speak about it. And this was when I was graduating out of Boston University. And then I did my MBA at Babson College. Well, while I was working at Putnam Investments. That was like a cheat MBA because it was an executive MBA. But when I was called in, I said, the student asked me a lot of questions. Everybody loves our idealism, our economic policies. And we have to live by it. And I explained it. That's what I keep on still doing at my advanced age of 90 years old. Just kidding, I'm 50 plus. All right? So this is the one that I was talking about, guys. Breaking news at 1:34 p.m. Treasury Secretary Mnuchin tells reporters that U.S.-China trade talks are on track. Okay? Now, some people look at that and they're like, oh, yeah, well, so what? Well, so what? You have to understand who Steve Mnuchin is. Yes, he looks like Jerry Lewis. Yeah, kind of. More fashionable, like, Armani glasses and stuff. And his wife looks like, a Hollywood actress. But he's very smart and he doesn't talk much. But what do you think he just came out like that and said that? Everything is manipulated in politics and in the markets. All right? So I like that when he said that. Kudlow would say it, the markets would shrug it away. Trust me. And then the markets turned around, moved back and forth, and then moved up. And what did I say next? And please read this stuff, because in addition to my trade alerts and my charts and myself trying to navigate these very, I shouldn't say treacherous, but very volatile markets, at least for options traders, and tell me if I'm wrong, you have to understand where my thinking's coming from. That's the difference between Clueless Aid Trading and every other subscription service out there. I'm trying to share with you guys what's going on through my head. I am not a frigging genius, but boy, do I understand the markets, and do I understand the political and mental game theory of President Donald Trump. I don't understand. I mean, I can't predict when he's going to tweet at 6 in the morning, and the markets are looking great. All of a sudden, it drops, 300, 400 points. I can't predict that, but I know it's part of a game. And all I'm trying to do with all my members is trying to get them used and familiarized to that concept that volatility is dependent on these type of things happening. I was looking for it like a $10 word, but it didn't come to me. So I said Treasury Secretary Mnuchin is one of the smartest and most credible members of the Trump administration, unlike few other loudmouths who making contradictory bullshit statements. Okay? And that means money in your pocket. Trust me. Because a lot of traders out there who are kind of new or not even new, they don't quite understand, like, oh, what's so important about Treasury Secretary Mnuchin? Hold on, let me turn my TV off. Saying something about the U.S.-China trade talks. Anyway, enough of that. All right. Now that we've gone through all that stuff, we have house, my friend. Excellent. Let's get into the nitty-gritty of the wild world of trading. We're going to go over a couple of charts, and then we go over a couple of stocks. Remember, it's a market of stocks, not the stock market. We're gonna look at Restoration Hardware. We're gonna look at Ulta Beauty, which was actually up a lot more earlier on. But as traders, you can always buy 10 shares before it happens with the options and sell those shares. We'll talk about that tonight. And Apple, of course, which is the ultimate American stock. And we'll move from there. So we're going to start off, and we're going to take Q&A in a few minutes. So we're going to start off, bear with me 1 second. I forgot to mention my friend Jody. Jody, how are you?
Good, Frank.
Thank you. Great hearing your voice, sir. Okay. So we're going to look at something that the media talks about a lot and everything, but the IWM. I made a ton of money on trading the Russell 2000 options, the RUT, and the IWM about 2 years ago, big time. In fact, I used to just focus on trading when it came to the indices, the IWM or the RUT. So I'm back on that horse again. Because the RUT and the IWM, which is the US small cap index, Russell 2000, includes lots of banks, regional banks, lots of small cap biotechs, and many other small cap stocks. I think it's worth looking at. And the fast money crowd on CNBC and all this stuff, they started talking about it about a week or so after we started looking at it. So let's take a look at it. Two things I like about trading the IWM options. They're cheap. They don't have midweek options. They have weekly options. This is directly connected to the US economy. And as long as the US economy is booming, they're fine. They're not dependent well, somewhat dependent, but not that much dependent on what's happening between the US-China trade wars. They're dependent on what energy is doing, oil and gas, banks, especially regional banks, and small cap biotech stocks. Just so you understand the underlying structure of the IWM. You want to see what stocks are owned in the Russell 2000? Go on Google, go on the Russell 2000, and look at them. And you'd be surprised that some of the names are the ones that we trade. Here's your high on the IWM, Russell 2000 ETF, 163 approximately. This is where we are right now. The last time I told you guys to buy it was here. It was back on the 23rd, 22nd of June. It went up by 1,600%. I wish I was a big time liar like most of the subscription services out there and said, oh my God, we just got 1,600%. I didn't make 1,600%. I made on average about 600% on average on the calls. My God, to me, I thank God when I go to bed at night if I made 600% over a matter of days. Okay? But it went up 16 to 1,700%. You guys know that because I kept on showing it. So what happened? Crashed, burned, and came back to the same level. Told you guys to buy it. And this is where we are right now. Is it possible that we go back to 163? I don't care. I'm only looking for 162. And then if it goes here, tomorrow's jobs number is very important. I heard a very smart guy on Bloomberg earlier on tonight after I came back from running some family errands. And he said, for an economy like the US, all we need is 110,000 jobs at this stage of our economic cycle to be created. Because we are at 3.1% unemployment rate thanks to President Trump's economic policies. Okay? Exactly. The only people who are not working are my spoiled rescued animals. Exactly. All right? Half kidding. The one of them is sitting right here on in front of my array of 14 monitors listening to me blabbing. So this is it's a very powerful pattern. I take trades in stages. So 162, we're actually above 162 right now. Are we? No, we're at 161.50. Good enough. Futures are up about 4.5. Asian markets like what they saw today. What happened? We are the ultimate leaders, of course. Never forget what makes America great is American business. So is it possible we go to 163? Yeah, I think so. And let me show you a long-term chart of the IWM. And I'm going to focus on the IWM a little bit more tonight is because I think that's where a lot of big money is going to be made. As the U.S. economy, thanks to the Federal Reserve Bank of America, as well as the global national banks, suck in the liquidity of what is happening. I'm going to talk about Alta tonight, which is up a gazillion bucks. This is what we're looking at on the weekly. So I'm just going to pull a name. House, who is loved trading the IWM with me from years ago, right, House?
Absolutely.
Yeah, I love you, man. I remember we used to yell and shout when everyone used to be in the chat room. I know things have changed and everyone like got quiet a little bit, which is fine. Everyone's going to get warm again. But we used to be like, yeah, we did it. Like, 200% IWM, and you were in there and a lot of the trades. So I love it that you're here tonight when I'm really focusing a little bit on this particular index, the US small cap. So let's take a look at the pattern, because that's what we generally do. So we had, nope, not correct. 1, 2, 3. Okay, so what do we have here? We have a big consolidation channel, and there was your neckline, and we broke up above it. Where is the next neckline? Well, the next neckline on a swing basis, going out 3 months into the months of March, April. Bear with me 1 second. Thank you. Is 170. And this rising channel is basically telling us that the US economy being as strong and with everything else going on, in between all the fluctuations that we have to deal with on an intraday basis, intra-week basis, we're going to get to 170. So taking a look at that house, what do you think?
Yeah, it's only a matter of time, in my opinion. I mean,
Like,
if you're patient.
it's not like a like next week or something, but we're talking about maybe a month or two.
Absolutely.
Okay, all right, because I know you know the IWM. That's the reason I'm asking you. So what we have here is what is this pattern, ladies and gentlemen? Anybody out there, please?
An ascending triangle.
Yes, thank you very much, sir. It's an ascending triangle, and we broke out of the ascending triangle. If you want to be very technically correct, all right, because I will put this out, and this is very important. 1, and this ascending triangle took from last December to now. So it's almost a year. It took almost a year. When you have an ascending triangle developing over 12 months, okay? 12 months, not 12 minutes. You have to respect it. There's a lot of money that's been absorbed in this picture. In the meantime, we have traded the IWM a couple of times, not as effectively as I would like to, in between 145 and 160. And now we're broken out over it. Respect what is happening right now. These are swing trades. These are not necessarily day trades. And at this point, on a weekly basis, as House has pinpointed correctly and validated what I just said, we are looking at least 165. Guys, focus on the IWM, US Small Cap Index, made in America. Well, not fully, because a lot of the components come from overseas countries. Any questions? Okay. Now, the thing I like about them is the options are cheap. They have weekly options. We don't have to go nuts pulling the few hairs we have on our head. Well, I actually look pretty good with less hair in my head. We don't have midweek options and this and that. We have weekly options.
Can I ask you a question, Frank?
Absolutely, sir.
So I actually pay attention to the IWM, but this
I'm
one didn't trigger for
House,
me.
just fix your mic for me a little bit so I can hear you. Are you there?
Yeah, can you hear me?
Oh, I can hear you loud and clear, brother. I love your voice, man. How's everything? How's your wife?
Everything's beautiful, man.
Okay, go ahead, sir. What is your
I
question?
I had a question. So how come you are so very strong? Is it because of the breakout of the ascending triangle that made you focus in on it? Because if you look at the stows, it looks like it's overbought.
Okay, so I can answer that question. So finish your question so I can answer that on what I'm thinking.
That was it.
Okay, so first of all, the stores are overbought, but look at the trajectory of the stores. They are starting to move sideways. That is the most powerful thing you can see when you start to see a major breakout over a multi-month channel. What we're seeing here is a bull flag on the stores, which looks like this right there. We also have to keep in mind that it's the sentiment of hedge fund managers, which I understand back in my days, who are now getting excited about buying the US small caps, which still haven't reached their all-time highs, unlike the S&P 500. Remember, the overall US market does not get fully overbought till the major indices, i.e. the NASDAQ, Dow Jones Industrial Average, S&P, which have all hit new all-time highs, but has the Russell 2000 hit new all-time highs? Nope. Am I right?
Yeah, you're right.
Exactly. So there's a catch-up game going on because as a fund manager, let's say you're a fund manager managing $1 billion or 500 million, and I've worked in those teams which have, you're playing the catch-up game. So you're looking for the undervalued sector that will still play catch-up. And this is where the IWM and the RUT comes in. So that's my direct answer to your question. And on top of that, if the US economy picks up steam, as it has been, then the IWM and the RUT, Russell 2000, despite all the international problems, will flourish better than the ones with more international exposure. Does that answer your question?
Yeah, that was really great information. Thank you.
Thanks, man. Okay, good. So there we are. So let's take a look at the S&P 500 on the TD Ameritrade system. So just want to show you, I haven't altered this chart one single bit since our last webinar, and I want to show you what happened. First of all, the internals are all fine. Yes, they're buckling down a little bit, but this is what negates the stochastics starting to ease back a little bit on that little pullback, or a pretty sharp pullback that we had. Does this look like anything on the MACD histogram, which is the underlying muscle? You know, what we call, if you go to the gym, they test your, what's that thing? What's that term called, House? They test your fat content?
Oh, BMI.
Yeah, BMI. Thank you. I love you, man. Okay. Yes, the body mass index, right? So the MACD can be called the body mass index. And I'm not even a fat guy, but I still need to lose some weight. Which I went to the gym more, paying every month. My son's like buffing up like nobody's business. And here I am, like, talk about mental muscle. Talk about a lazy guy when it comes to a gym. So this is the BMI of markets, the MACD. All right? The body mass index. And I'm sure you guys are, many of you are a lot fitter than I am. Okay. Even though I might look a lot younger than many of you, but still. So this is the BMI index. Does this BMI index, I'm sorry, the MACD, look like it is starting to really falter? Just a quick question, Paul.
Nope, looks good.
Looks pretty good. Exactly. So that shows you that the underlying muscle strength or the body mass index or the MACD histograms, the MACD for the market is good. Okay, so we like that. Now, this thing they call the McClellan oscillator. Can somebody tell me why it oscillates so back and forth? Because it's nothing to do with the BMI and the muscle index of the market. But why does the McClellan oscillator go up and down like a frigging monkey on a hot tin roof? Just think and answer. House, Mike, Jody, Paul.
Apologies. Repeat that.
I'm sorry, what was that?
Repeat that. Repeat the question.
Yeah, the question was that why does the McClellan oscillator, okay, this is actually the New York Stock Exchange McClellan oscillator. Why does it move around so wild compared to the more steady movement on the MACD, aka body mass index of the market, or the stochastics? Why does the McClellan oscillator move around more rapidly than these two other indices that we follow?
Because it's an oscillator.
You're very close to the answer, but what if you had to explain that to one of your Milwaukee buddies sitting at a bar and having a nice, cold IPA? What is the simple explanation for it? I know you guys know it because that's what we do all day long. I'm giving you the hint.
Is it tied to the VIX, Frank?
No. It's tied to what we do all day long.
Which is trade.
Thank you. They're trading. Yes. McClellan oscillator has to do with trading. And that's the reason this oscillator moves around like a monkey in a hot tin roof, because we all are held hostage to trading. Exactly. Who said that?
House.
Oh, thanks, brother. Okay. So yeah, yes, it's but in to give Paul kudos, yes, it's of course the VIX is a contrarian indicator. The VIX dances around, and thank God my VIX charts are like very mathematically drawn. I look at those candles. By the way, very important for anyone who's going to listen to this. You want to know the market direction of what's going to happen on an intraday basis or on a multi-day basis, but more on an intraday basis? Look at the VIX charts that I put out there. Every single candle of those resistances and supports will be money in your pocket or money out of your pocket. And I'm sure all of you look at that, yes?
Yep.
Good. I can't trade the VIX like crazy because the VIX options are very manipulated. Unless there's a major move in the market, like a no China deal, like that when President Trump, said that from London. I'm like, oh my God, I should have bought the VIX calls. But aside from major moves, the VIX calls and puts don't give you any money's worth. I have had VIX calls at 50 cents. House knows that, which barely moved to 60 cents, and the market was down 200 points. So how frustrating is that? So I said, F it. I'm not going to trade the VIX calls. So yes, the McClellan oscillator is great during extreme circumstances, but in general, it is just a trader's oscillator. So it's fine. So thank you for those answers. I'm just, our sessions are all about educational stuff, and we want to teach our members like how to look at the. I literally look, like I've said before, 24 different indicators on all my screens. I only show 3 or 4 because that's the best way to do it. So let's go back to the original charts. So this weekly chart that I drew weeks ago, this is the big chart. This is what you call the big picture. Guys, and you guys do watch CNBC once in a while. You see some of the there's some smart guys. Todd Gordon from Trading Nation, I like him a lot. He's very smart. But when they show the charts, do they ever look like this? I'm sure some of you look at the
No.
and they show the simple charts, right, without any lines or anything, right? Like
Right.
what's his name?
They all
Carter,
do it. Yeah, they all do it.
and those guys. I mean, some of them, like, yeah, they're talking levels. They're talking levels. But when they show the charts, I'm like, what the hell am I looking at? It's like a friggin' watered down beer, and you're telling me like that's like something I should follow? And I want you guys to follow other services and stuff. I'm like, and come and tell me, Frank, improve your charts. I'll do it. I'm a constant learner. But I scour a whole bunch of things on stock tweets. I post once in a while. I still have like, what, 34,000 or 33,000 members? I can't believe they even still follow me because I don't even have time to post on there. Once in a while, go in there and interact. Some guys are dicks, so I, slam them down. But yeah, Paul knows that. But aside from that, you need to be precise. We need custom-made suits. I don't do custom-made suits on Wall Street. I didn't. My wife's like, "Oh, you're gonna buy a $2,000 suit?" I'm like, "No, honey, I'm not. I'm gonna go to Woodbury Commons up north and buy a couple of Giorgio Armani suits and get my local tailor to tailor it for me for $40. That's a smart way of doing it. I don't do $1,500 suits. Do I wear a suit when I'm sitting down for trading with my members? Yeah, great. I'm wearing my hoodie and my sweatpants after I took my dogs out for a walk in the morning. All right? I'm serious. So we're not, but when it comes to charts, we have to custom make it so you guys can follow it. So let's do this. So I drew this. This is what is this pattern right there? Please, somebody just scream out. These two dotted lines. What is this pattern?
Oh, what?
It's a rising wedge. Okay? It's a rising wedge. And the more you understand this stuff, the more money you're going to make. What is this one? The two white lines.
Support.
No, that's not what I'm asking for, the name of the pattern.
Ascending triangle again.
Yes. Ascending triangle. Thank you. So we're going to call it AT. This is an AT. Attack. This is a RW, a rising wedge. Somebody should take this video and friggin' send it to CNBC and Kramer and everyone else, okay? So this dotted line is a rising wedge. This is an ascending triangle. And in between that, there are multiple channels, right? Channels that if things go right, where the market can go to. So what I told you guys on 2 webinars ago, that we are moving too far away from the 34-day moving average, the orange line, and the red line, which is the 50-day moving average, 50, 34. Listen, the more you understand the bigger picture, the better off you all will be in dealing with the intraday fluctuations, which I hate. I hate the algorithmic high frequency trading bots. I do. It messes up my short-term trades, but my long-term swing trades, literally 80% of the time, work out. So when you're looking at this chart without all this thing, you have an ascending triangle, you have a rising wedge. Look what happened. This is what blows my mind about technical analysis. And remember, I'm self-taught, even though I learned from some of the best people out there, which I've mentioned a few times. Ralph Acampora, Luis Yamada, Tony Dwyer, who still comes on TV. Okay? I've sat not directly from them, but I've sat on their, Tony Dwyer actually worked for one of the firms that I used to work with. Brilliant guy. And anytime those guys come on, and my favorite, Katie Stockton. When Katie Stockton comes on, not just because she's really good looking, but seriously, when Katie Stockton comes on any of the media, you guys better stop anything you do and listen to her. Google Katie Stockton. Okay? Stockton. Maybe she's from Milwaukee. Telling you, I love listening to smart minds, not the blabbermouths. So look what happened. Here's your rising wedge, and look what the market did. It hit that and created, what's this pattern? What's this candle called? What's the name of this candle formation?
The hammer.
The hammer. The hammer. That's MC Hammer at work. It's a hammer. Now, if this hammer breaks below this rising wedge, it's going to hit the bottom. It's going to hit the, as House correctly pointed out, the 35 level, which is the ascending triangle right there. Bottom of this ascending triangle is 29.65. That's a long way down. But at least I know from a bigger picture perspective how to remain sane and not go nuts just because the market is going crazy on an intraday basis. So let's look at so we know what the downside is. The downside is we can go as low as 29.74. That's a long way down. Before that, we have this 30.65 on the SPX. This is not the E-minis, nothing. You don't have to convert the numbers. So put this on your screen. If anyone needs help setting up these charts, I'm more than I'll be more than helpful. Take some time off right after the market to set the charts up for you. This is on TD Ameritrade. Okay, then we know 30.33. Now these things happen really fast. What's the upper end of this channel based on the lines that have been drawn? By the way, here is another, like, furious. I love these rocket ships. Look at this. So where does that end? That ends at 31.70, roughly. 31.70. So that's what I'm saying. The market will most probably land up at S&P 500 31.70, which is almost 60 points. I'm sorry, 50 plus points away from here, 53 points away from here, 53 points from where we are on the phase one China deal signing. 53 S&P points. Somebody volunteered to tell me how much is that on SP points on the Dow Jones.
425.
Somebody's fast. Wow. Okay. I was getting my $1 calculator out to figure that out. I mean, I knew it was around 400 thing, but 8 is 425. Thank you. We have 425 points on the Dow to be had between now and before the ultimate date. And what is that ultimate date? December 15th, when the tariffs go into effect, or they don't. I think we get there. Because at that point, the markets are hitting the mid channel, and I believe we could get a substantial pullback to this level here. And somebody, please tell me what that number is. That's 30.31. If we drop from 31, and I'm doing this in real time, guys, okay? So you can hold me accountable for this. Well, you can hold me accountable for everything that I do because I lay it down. Come on. What is going on? Okay. And it still doesn't change the trajectory of the bull market, but from a trading perspective, yeah, you have to know these things. So if we drop from 31.74 to 30.31, 31.74 minus 30.31 is 143 points. 143 points. What's 143 points on the Dow Jones Industrial Average on S&P handles? It's 1,144 points on the Dow Jones Industrial Average. Okay, so be prepared for that. Just the way I said, the markets could drop, fill those gaps. I believe this will happen once we get up to that level. Once the phase one deal is done, and all of a sudden it's just like, there's nothing, whatever. Or it might happen in January. Did you guys understand what I said?
Yes.
Okay. Now, to determine that on a 15-minute basis is not possible, but I'm just showing you the bigger picture. All right. Are we good with that? Jody, Mike? Okay.
Yep.
Now, Apple. Let's look at a couple of leading stocks. These are leading stocks in the market. I'm going to move clear the drawing set so everyone can see it. This is one. Imagine if this was a biotech stock and no one. One second. Jody's expert at figuring out ranges. So this is a weekly range, right? The range breaker. So give me a quick rundown. I mean, on the depth of the range, 233. And this is a 2019 range we're talking about. Almost a 12-month range. What's the difference? What's the depth? Somebody tell me.
92.
Wow. Okay, so I didn't have to punch it on my little calculator. 92, sir, right?
Yep.
Okay. So over the next, and that was a 12-month range, right? Almost. From this 2019. So if you want to really think long term, and I'm going to draw a line. It's going to happen, guys. It's going to happen. I'm telling you right now. Why do I say that? Because I've seen this happen way too many times. Have I personally had the patience to think that long term? Sometimes not. But I'm getting better. Ladies and gentlemen, you heard it here first. Apple, over the next 12 months or less, is it 300 and somebody should send this to the media.
360.
330, sir.
Oh.
Yep, you're close. $329 with the lower end of the channel. We're drawing this out. I'm going to send this to Tim Cook. I'm going to actually put this video out to Tim Cook. You should see that somebody actually tracks Apple other than his stupid analysts who keep on upgrading and downgrading the stock. Some guy upgraded the stock to 300 today, which was great for us because we were long Apple, and then we bought. Okay. So the low end of Apple, ladies and gentlemen, saying it once and for all, this is one of the, excuse me, one of the cleanest ways you can trade the US financial markets. If you just want to focus on Apple, this is the way to do it. Don't have to deal with the biotech, with the FDA approvals. Clovis going up nuts. We make money, then this crashes down 40%, and this and that. You want to play the cleanest way of playing the US economy is Apple, the SPY, the IWM. And stop worrying about all the crazy stuff that I have to worry about, which we make very decent money on. Okay? The Ultra Beauties and stuff are great. But that's one section of the US economy. Because the last time I checked, I don't wear makeup. I don't shave for 3 weeks once in a while. Okay? But that's a different part. This is the slice of the US economy on a weekly basis. So by the time all is said and done, China and everything, the first stop that I see for Apple is 278, which is the upper Bollinger. I don't make this up. I'm just looking at the charts. 278. That's 14 points higher. I believe that Apple gets to 278, 280 by the end of this year. I do believe that. Okay? On the left. Good. What's happening internally? Apple. There's a little crossover here. That means the stock still is in danger of coming down to 257. Every time Apple's falls $7 or $8, what happens over the next couple of days? The frigging stock bounces. Why? Because of you and me? No. My charts? No. It's because the value fund managers keep on buying the stock big time. What's happening with the MACD? Oh, Lord. It can't wait to go higher. Is it overbought? Sure it is. But do the major fund managers want it by year end? Yes. Yes. Now you can be an analyst or analyst and like say, oh, Apple's iPhones don't sell, blah, blah, blah. That's not my business. We're not that smart enough to know. Their services business is going nuts. Okay? So Apple is a great trade. And I believe you need to trade it in increments of $5 to $10. Told you guys to buy it when the stock had fallen down to 255, 260, 260. The stock is at 266 after hours. Everyone okay with me on that? Yes?
Yes.
Okay. Let's take a look at things which are going nuts. Now, this is a stock that I really slapped myself today because we made money on it, then I left it 2 days ago. And the frigging stock went up nuts. Restoration Hardware. Look, we have traded Restoration Hardware previously, and this is an old chart that I'm pulling up. Falling wedge. Then Warren Buffett comes in here. And I told you guys, I said, buy it. It was around 183. The frigging stock tonight is at 234. I mean, this is what you call like unbelievably powerful charts. So if somebody asks me, well, should I buy it here? I tell myself, you know what? If you're a true, like, aggressive trader, yeah. Because I can show another line that tells you where the stock is going. I'll tell you where the stock is going. The stock's going to 260. Don't believe me, just look at the charts that I'm showing you. Look at the volume. Look at the internals. Remember, powerful internals stay well above in overbought zones. I mean, this can't wait to go higher. What if Buffett's Berkshire Hathaway says, you know what? We actually like you guys. Over expensive. Has anyone been to a Restoration Hardware store? Just asking. I've only been to twice in my life.
No.
It's like an experience. You feel like you walked into like frigging Paris. And it's an American company. You know, there's a Parisian furniture maker called Roche Bobois. You touch a frigging couch, it's like $6,000. My wife always laughs. You know, I'm like, honey, it's like a museum. And they're frigging ugly, most of them. Restoration Hardware is actually nice. We actually have like 2 or 3 pieces from Restoration Hardware from years ago. Like, it's nice. It's like elm tree or something. But it's affordable if you want to spend that kind of money. But look at this frigging chart. This stock is going to 260. That's all I got to say. Let's take a look at Ulta Beauty. Now, this one, told you guys to buy it at the bottom. We had it as a earnings play tonight. And those options are going to be sweet. This is what happens, guys. This is the stock market. You know, Restoration Hardware got hit because of the China thing, which I want to show you guys. Just so you understand. I got to close out soon. So Restoration Hardware fell from back in March from 158 down to 84 because of the China trade wars, because they make a lot of stuff in China. Very high-end manufacturing facilities in China, the supply chain makes a bunch of this stuff. But American companies are flexible. That's the reason why Nike and everything went up, even though we weren't in Nike, is they know how to move the supply chains. The countries benefiting from the Chinese trade wars are companies like Vietnam, Thailand, Bangladesh, which is the second largest textile manufacturer in the world. They're not getting tariffed. They're not making political moves against the US. They're all benefiting. They're all thanking President Trump for starting the trade war with China. And Chinese labor costs have been going up for the last 15 years. When a country moves up economically, people want more money, just like us. How many actual Americans, not immigrants, want to work cleaning up your garden or doing your landscaping? No. Every single contractor I know in New Jersey, from Staten Island, Italian contractor, Irish contractor, has 30 Mexican or South American workers working for him. Duh. California has 2 million agricultural workers picking the grapes on the vineyards and the tomatoes and the avocados and whatever. We need that labor. It's called economics. Well, China's the same way. People are moving up the economic ladder and they want more money. But then the trade war started and this all started shifting on acceleration basis to countries in Asia, which have a lot of labor, like some of the countries that I mentioned. Even Burma, well, they called it Myanmar. Okay, so there you go. This thing is going higher. So this happened, China thing, see you later. And the worst part was, I was in a very important business appointment yesterday. I was just watching the markets. I apologize to you guys. I didn't put the RHER earnings traits out there. It went berserk today. It was up 14%, 30 some dollars. So I do apologize for that. So let's look at Ulta Beauty. Now, what I like about Ulta Beauty is it's got a lot of room to move. This is Ulta Beauty on a 4-hour chart. This is your 50 fib, okay? Come to Wisconsin and you can see $12,000 toilets. Whoa, what does it look like? The Pentagon back in the days? Mike just put that up there. If I sat on a $12,000 toilet, I don't think I'd be doing anything. Probably be tweeting out to you guys, but I'd be so nervous. I know the Saudis have like frigging $100,000 gold-plated toilets, but that's what the Saudis do, the Saudi kings. Okay, gold-plated Lamborghinis, gold-plated toilets. Oh God, help us. Okay, 50 fib, 300. I think, given technical parameters, Ulta Beauty goes to 300. This is what happened to the stock when they said the contour stuff wasn't working that well. The stock fell from 340 to 224. This was your range, and we are now almost at the top of the range. Kylie Jenner, and they sold part of their business to Coty Cosmetics. I believe the stock is worth 300, so please keep an eye on that. What are the stocks? Just throw me one. In reference to the expensive Parisian furniture, yes.
Expedia.
Expedia, yes. So I bought Expedia like really cheap calls, right? So I'm down on it a little bit, but I like the chart. Expedia fired their CEO, right? They're going to hire a CEO any day. This is a real company. I like the chart a lot. I bought the really cheap call saying that stock was going to go to 115 by December 20th. I'm going to stick to that because I have seen, and I don't have time tonight to go over it, and I'll do it on the Sunday night thing, show you all these crazy reversals that we have played over the last month or so. And I wish, and I've made some money on it, but I wish I went in really hard. Like I'm talking about 40 cents to like $5. It's not about just buying the trends, it's also buying the reversals. So Expedia just broke from 135 down to 95. Whoa! That's what, 40 points, guys? 40. So I believe the stock, based on what I see on the charts, can get to 115. So I bought the 115 December 20 calls. Now, when you look at the technical pattern on this chart, to me, it's a I don't, I mean, it's almost like cup and handle kind of thing. But does it? I mean, just asking you guys, do you think it might go to 115 based on what you see in front of you? Look at the internals. 1 second.
It looks like that moving average might be resistance
Look
right
at that
there.
internal. Look at that, and look at this baby off the bottom. Look at this. This was your bottom at that level, at 93. So just asking all of you, just wanted to get a consensus opinion. And that's why I love buying. You see, on these type of things, I'll buy the extreme thing. I'll buy $10, $15 out. If I get blown out, I'm not going to be that hurt. But if I win, I'm going to make 500% on the money. And that's how you make accounts grow. One part of your account grow. And if you have a small account, these are the best ones to play. So when you look at this, does it look likely that the stock will at least hit 110 and maybe 115, where was the breakdown point? Forget about going up to 135. If they get a new CEO, the stock will jump up $10 and get 119. I mean, $15, like boom. And they're getting a new CEO. What do you think? They're some sort of like, BS company? A serious company. So what do you guys think? Paul?
I like your profit odds there.
Yeah, I like your answer. It's a probability game, right? So this is what I like from a technical basis. Look at this candle. Love it. So what's happening here? What is this pattern?
Bull flag.
Thank you. Thank you. What's going to happen? They fired their CEO. They're going to fire another CEO who's non-existent? No, they're going to hire one. And companies like that which are very directly, intricately tied in with Wall Street bankers, they're like, wow, we're going to get your value up. You drop 40 points. We're going to value up at least 50% from the low. What's 95 plus 20? That's exactly where we are right now. 105. I believe the stock goes to 115. Let's look at another stock that we covered all that. Let me see here. Another one that, yeah, let me show you one that I have a bunch of calls on. This thing boggles my mind, which is fine. Like, this is one frigging powerful chart. So I got to go weekly to see the reference point. You see, as technical traders, we have to look at previous reference points. Here, which is around 155. Here, 125, exactly where we're at. Here, 140, ALNY. Look at the pattern. You can buy some calls at 3 or 4, leave it in there. If it gets bought out, it gets bought out. This is a major biotech company. Look at the internals. This is your trader special, right? So it's moving up and down. But look at the MACD. What's the simpler name of the MACD that I explained earlier? What's it called? House? House left. Hey, Simon, how are you? Who's Simon? Simon, can you hear us? Okay. So what was the nickname of the MACD we put out there, Paul? Anyone remember? Like earlier on? The BMI, the body mass index of the underlying stock, right? Are you lean? Are you strong? Are you boom, boom, boom? Do you have less fat than muscle? Look at the body mass index. The stock is going to go to 140. So that's all I got to say. Simon, can you hear us?
Yeah, can hear you.
So where'd you come from?
Oh, you on Twits?
From StockTwits?
That's right.
All right, man. You missed most of it, man. But listen, I'm putting this up on Google, YouTube, and welcome. I got a lot of, I forget to put out my link on StockTwits most of the time. But I'm Frank. I run Clue Estate Trading. And anyway, at least you heard my voice. So, I'm not a robot. But you're going to hear, I'm going to be ending now. A lot of good stuff we covered tonight. I don't want to keep, we've been going on since, we've been going on since like 8:38, so about an hour. So I don't want to go on too long. So you can go to Google YouTube channel, Clue Estate Trading Simon, and just listen to the recording in about 30 minutes. Fair enough?
Will do.
And also, if you need to DM me, then on StockTwits, just DM me directly. I'll put up my toll-free number in there if you feel like talking and just figuring out. I'm not your nanny or diaper changer, but I'll definitely give you what we do, and join us. I'm telling you, and that's the way it is. But thanks for coming by. All right, guys. So here is one example of that I like. Clovis, we made a ton of money on the first move. Now we're losing money. And this one, I like the fact, this is what I like about it, because I'm also a distressed trader. What does that mean? It's like a guy who buys foreclosed properties from $500,000 and he buys it at 100,000. I believe this gap here will hold, as I put on my real-time Twitter feed. So my calls are down about 70% on this baby after making almost 200% on the way up from this level, from about 12 that I told you guys to buy it. So I believe this will hold, but it might slip to 8. But we'll see what happens. But in the meantime, the rest of the webinar, Simon, you're going to hear it on Google, YouTube. You're going to love what we do. And if you want to really see what we do, you got to sign up on Clueless 8 Trading on the website. It's clueless8.com. And the only thing I can guarantee you, I'm not going to guarantee you're going to make money because that's up to you. But I'm going to guarantee you, I'm going to show you your trades that are going to blow your mind. All right. And when you listen to the rest of the video on YouTube, you'll see what we're talking about on the market and stuff. On that note, thank you for attending. Gotta go. The dogs are yapping to go out. God bless you all. Clueless 8 Trading Frank. Sayonara. Phase 1 deal, China is gonna get signed. Everything I said about Donald earlier on, you know I mean it. Good night.